Hey everyone, it's Mike Andes, and you're listening to the Business Bootcamp podcast. Today, I'm going to be sharing all the revenues, the profits, and the losses from all the different businesses that I run. I hope you enjoy it, and I hope you learn something from it. Before we get to today's show, though, a big thank you to today's sponsor, which is Gusto. A big thank you to them for literally supporting the show for a whole nother year. Throughout all of 2021, they've committed now to supporting the show, and I appreciate them so much for allowing me to do what I do. And make sure you go to gusto.com/bootcamp where you can sign up for 90 days completely free using them for payroll and a really, really simple way of getting benefits for your employees. If you don't know about the tax credits behind getting benefits for your employees and the potential benefits of having benefits like health benefits for your employees, definitely check them out. It's very simple to sign up and it might surprise you what the costs really are. All right, so without any further delay, we're going to go ahead and jump into me showing you all the different revenues and the expenses that go into running businesses. So if you haven't already in the past, make sure you watch previous months. I share my monthly financial reports as a way to inspire and educate and to chronologically be able to see the journey of growing these businesses over the course of months and years. So I don't do this to gloat. There is nothing to gloat over. There's good months. There's bad months. There's months where I do really good. There's months where we do really bad, or where we're investing back in the business and on paper, it looks like you're losing a lot of money. So keep all of that in context as I jump into my revenue report. So I'm going to go ahead and share on my screen the reports here, and then hopefully we can go through these. So first up is the Augusta Lawn Care Corporation. This is the local Bellingham location, the first Augusta Lawn Care location that I personally own in Bellingham, Washington. The revenues were $143,743, and they did a profit of $31,056, which is a little over 20%. It's like 21, 22% in profit margin. Again, all of these numbers I share today is on a cash accounting method, which means this is how much money actually hit the bank account, not how much was earned. I am very well aware that their revenues that were earned or accrual accounting was much higher in April, but I make sure that I stay consistent by using cash accounting to show exactly what actually hit the bank account. So even what our metrics that we actually share with our franchisees is based upon accrual accounting, but this is cash. I do this for a very specific reason, because there's certain things you can do with accrual accounting to move some numbers around. And I don't want that. I want it to be when I come to share my numbers publicly, you know exactly that this was the money that hit the bank account. So revenue is $143,000. This is the first month. I'm very happy about this, actually. This is the first month that one of our franchisees actually surpassed our first location in revenue. Very, very happy with that. I don't know if they did the profit from a profit standpoint, if they surpassed it, because they're just in hyper growth mode. However, I'm super happy about it. There's no pride whatsoever in me being surpassed by our franchisees. It's a testament to what we're doing, and I'm very, very happy for them, and massive congratulations and shout out to them. Blaine Anytime Fitness. So I own a gym in Blaine, Washington. It's an Anytime Fitness franchise. We did $44,810,000 in revenue, $9,722 in profit. The big development for this past month was the fact that we are adding now in supplements. So this is not seen in this revenue. So you're going to see probably in the next couple months, revenues start to tick up as we add in the fact that we are going to add supplements to our offering and to our clients and our members at the gym. So really happy with that. Again, a good solid 21% profit margin there at the gym. All right, online. So this includes landscapebusinesscourse.com, Business Bootcamp Podcast, includes lawn care web design, includes Teachable. All the links down basically below the video here is what is included here. This is going to be everything from lawn care web design, where we build landscapers' websites, Landscape Business Course, the course there, Teachable, where we now have a whole bunch of different stuff, MBA for Entrepreneurs online course. Talk about business and stuff. Like, I think that's a great program, by the way. As we continue to add, I try to add like 5 to 10 a week. So the most recent module 6 and I really think the last little part of that is really strong. Talking about financial reports, showing how to use those financial reports to create ratios and figure out what your business is, where it's strong, where it's weak. So all of those revenues go towards really generating more content. And so you've seen as the revenues have gone up, the profits have also kind of been going, not going bigger and bigger and bigger, because my cost used to be $3,000 or $4,000 a month. But now this past month, April, was our first month where we had 3 full-time media people creating content for the community on TikTok, Instagram, Facebook, and YouTube. And so that costs money. And we did a traveling trip this past month to great content. So all of those combined, and that's a big reason why I make these videos to share the revenues, is because you all are so much a part of what we're trying to do here and building the channel, building the audience that we have. For the 35 people, landscaping businesses that we create your websites for, it's $3.99 per month. And there's no contract, there's no initial fee. You can cancel anytime. For those of you who have signed up for that, like, massive help for us because we have a steady flow of income. We make about $140 to $150 per month in profit on the $3.99, just to be perfectly open. And that money goes directly into creating more content and gives me, it's kind of like my recurring revenue, like with a mowing is for a landscaping business. It's my recurring revenue. I know that I can depend on, that we can solidly build the content arm of the brand, and that will continue to grow and be able to keep investing in the better content. And I know over the past, even throughout April, you've seen the vlogs get better, the quality of the content get better, the distribution on things like TikTok and Instagram has actually been there. I used to post on Instagram once a month. Now it's a few times a day. All of that is because of our investments in the media team, and we will only get better and better at that. All right. The next part is the franchise. So if you've been following the past couple months, you know the franchise has been losing quite a bit of money, like a lot of money, every single month. We're getting more efficient. We're starting to getting our feet underneath us a bit. We're still growing a lot at Command Center. But the revenues for the franchise were $84,555. The profits were $5,206. You can see over the past few months that has gone up and down. We've lost six figures in 1 month on the franchise. It's a startup. It's going to be up. It's going to be down. It's going to be in. It's going to be out. But we're investing heavily. We're trying to grow quickly. And just like so many of you, it's hard to find people that want to work an entry-level position. Hard for people to just to show up to an interview, let alone show up to their first day of work, let alone actually be diligent to that job. So the team that we built there, very proud of them. They're an amazing group of people to just juggle 41 locations now across the country all day long, as we're trying to at the same time figure out how we're going to silo the Command Center, and then dealing with the fact that it's hard to just you're training employees that literally might not work out, and you got to train them and then they just leave. The same issues you're having at your business with the whole labor shortage, we're having as well. And so we had to make some commitments financially just to make sure that it stays in order. We now having health benefits starting in January. And a lot of that stuff is we have to have Command Center running and operational and long-term commitments, and people are thinking long-term for the team. And so that's why there's been losses in the past few months, but I'm really happy that we were able to, at least get above zero this month. And I expect that, like I said, over the course of 2021 for us to basically break even on the franchise as a whole. All right, next up is the 2 corporately owned locations that we own out of state. That blank spot in between there is what used to be Mount Vernon. Again, Mount Vernon Augusta Lawn Care is our what used to be our second corporately owned location, which has now been sold off to the general manager, and that's an option that they're able to do after their first year in business. Now we have Mooresville and we have Dix Hills, New York, where we have 2 corporately owned locations ran by the general managers, and these are both in their second and third month of growth. They started, I guess, in February, so third month. And so they're in massive growth phase. Again, this is cash accounting. So what that means is everything they did the month before got everything they did in March got billed April 1st, and they collected the revenue from that. Everything that they did in April in terms of mowing got billed May 1st, and we're not seeing that revenue. So keep that in mind. So I know that both of these locations did about $30,000 to $40,000 in actual earned income. But again, this is cash accounting, money that hit the bank account. $23,237 for Mooresville, $13,743 in revenue for the New York location. And both of them had significant losses, $34,000 negative or loss on Mooresville and $18,000 loss in Dix Hills. Does that seem like a lot? This is all expected. This is all part, when we go into a general manager location, or corporately owned location, I should say, we are expecting to burn between $90,000 and $95,000 before they become profitable. And when they get to profitability, we expect them to be profitable every quarter going forward. So this is absolutely a faster going from zero to next month, probably doing 40, 50 plus thousand at least per month in revenue. That's a big jump. And there's a significant amount of advertising, trucks that are purchased. So inside of that, like negative 34,000, there's a car, there's a truck. Dix Hills is this month buying a big truck. So like that'll be their third one. So like they're growing. It's just part of the game, and we expect that the first 6 months of them growing, and by Q3 we expect to be profitable each quarter after quarter two. So those are expected. They're growing very quickly, and you'll see next month the revenues on both of these will jump dramatically. And they will not be profitable. They will be profitable after quarter two. So starting July is when you're actually going to start to see profitable numbers from those locations. All right. And then stocks and real estate. So this is more my personal side. So the stock market was really, really bad the last week of April and has continued to slide. Since like mid-February, the stock market was up and down, like just like a teeter-totter back and forth. And there's a whole bunch of things that have gone into that in terms of monetary policy, the fear of inflation. I am heavily invested in the stocks in terms of the tech sector. And so even though the S&P 500 is reaching like all-time highs over the past few months, that S&P 500 includes different sectors outside of tech. I am heavily on tech side because I'm long-term and I'm not thinking about what's happening next few months. That being said, I do swing trade slightly when I know the market's going to be this way, probably at least for the next few months. The market, in my opinion, is going to be seesawing. And so I am kind of swing trading, which basically means I'm going to go in and out of the market based upon when there's a good deal, I'm going to buy. And then when I think things are getting a little frothy, I'll pull back out. So what happened, you'll see here, if you compare it to last month, I sold about $150,000 worth of stocks, and I withdrew that in the third week of March. So that's fortunately about when we were about the eclipse of the market. And then over the past week and a half, it's been going down significantly as well. However, for the total change over the course of the whole month, from April 1st to the end, May 1st, the total change was $17,000 positive. So good. I still retained that $150,000 in margin, and total invested in the stock market is about $763,000. All right, for the real estate side of things, revenue is about $16,000. These are just kind of rough numbers because partly due to the fact that rent comes in from some of the tenants, but then we have some people who are some of it gets assisted living, or in terms of the assistance from their pay, and that's delayed and all the rest of it. It's about $16,000 in revenues. And we had to rehab an entire unit. So I think if you go back to like episode, I want to say like 3 or 4, maybe 2 of the vlog, you can see where I do a walkthrough of a property that we are rehabbing. And so that property was completed. We had to do renovation of the landscaping because they tore up the lawn and had a burn pit and all the rest of it. So all those expenses, everything all combined with the mortgages and utilities and all the rest was about $40,000. So I guess you could say we were about $24,000 in the hole. But again, we spent about $25,000 on renovating this one unit that was needed to be gutted. We took all the carpet out, painted it all, new cabinets, or not new cabinets, new countertops, new fixtures, new appliances, things like that. So that's going to get a new renter in here next week, and we'll be up and rolling on that. The debt on my real estate is about $1.7 million. The refinance for the house that I was expecting to go through, and I said last month it was going to go through, it did not go through. Several different reasons why I decided to not go forward with it. The fees were going to be pretty abhorrent for the amount of money I was getting out. And I just figured, you know what? Yes, I was going to get a really good interest rate. I was going to cut off like a 1.5% off my interest rate, but the amount of fees, because I was not pulling a ton of equity out, honestly, on the cash out refinance. I was only pulling out about $130,000. So I was like, it's not worth paying the fees for the refinance. So I decided not to take the cash out, even though that was the plan last month. So did not take the cash out refinance. That's somewhat why there's still margin on the stock side of things. But in terms of debt for the real estate, $1.7 million, the equity is about $2.92 million. So I guess if you looked at the equity portion, it's like $1.2 million. But again, I'm not selling. So in my mind, like if you look at this, like the real estate is really a cash, where I put my cash aside for tax purposes, and the stocks is where I can move money in and out based upon the growth, where I think there's opportunity. And so this past month obviously was taxes have to get paid. So I sent out my tax bill. And yeah, when you're talking about, big numbers of tax bill, that was a reason why too. I just made sure that I kept the margin in the stock. I was going to pay it all off. If you listen to last month, I was planning on paying it all off. I decided not to. I withdrew a little bit out of the stock market, paid my taxes, and then also was able to rehab this location. I do not keep very much cash personally. Most of the cash goes into the businesses, and then the stocks, the real estate, any sort of revenues I get, profits are going back into the businesses. And so it's just really a tightrope of growth and managing the finances in a way that is prudent for all of the different businesses. So again, I hope that was helpful, inspirational. Again, I know these are not the most exciting videos, but I hope that you can learn something from it. And if you're running multiple businesses, you can appreciate, just how difficult it is sometimes to be juggling all these different things, and, hopefully learn that there's months that are good, there's months that are bad. When you're growing along your business, you're going to lose money if you're growing 50, 60, 70% month over month. So, Mooresville will go from 20,000, like next month, you'll probably see like 40,000. Like that's like 100% growth month over month. That costs money. I've always said growth sucks cash. That's why there's losses. The franchise, it's still net negative for the course of the whole year. So far, over the course of the next few months, you're going to see it profitable every single month. Then in December, you're going to see a massive drop when we start investing heavily in software. So this is the ebb and flow of business. This is the part of what I love to do. And this is why I share these numbers, to be transparent with what's going on, where the money is being made, and so that you all can be inspired and educated on business in general. So hope that was helpful. I'm Mike Andes. You're listening to the Business Bootcamp Podcast. We'll see you next time.